Oladimeji Peters, a quintessential gentleman, experienced business development and analytics manager, certified fraud examiner, astute entrepreneurial expert, and industry captain, is the managing director and chief executive officer of First Central Credit Bureau Limited, the first licensed, truly independent, ISO-certified credit intelligence firm in Nigeria, and indeed one of the most distinguished CEOs to look up to in 2024.
On a personal basis, I don't think I know what it actually takes to be successful. But I think I've been a very lucky person. For me, on a personal basis, I just try to, like you said, be resolute, firm, and determined. But then I've also been lucky at the corporate level to have a good team of wonderful people, excellent professionals who work around the clock to ensure that what we do here actually carries some weight. Well, the founding fathers are masterminds and pioneers of other brilliant initiatives, the Bureau being one of them. And they had built the Bureau on the basis, or should I say, of the credence of, if you borrow something and you say, at the most basic level, anyways, if you borrow something and you say you return it, then you shouldn't default or fail to return it. You should actually return it. And in the yesteryears when there were no bureau, we would see banks, file for Chapter 11 or wind up simply because people borrow money and then, there's a deficit. When they can't meet up their capital requirement, they go back. And that was the case way back. But again, the Apex Bank has been supportive. They've been able to also create supporting institution to meet, some of these needs, and it's very important. As a nation, it's important that we create this type of institution, whether with a credit bureau or microfinance bank, to actually help bloom the economy. Again, like the name signifies, and it's symbolic. The idea was to create something that has never been done before, and something at the focal point of economic need or even economic development that would attract or affect rather larger macroeconomic variables, starting from the macro. And indeed, we've seen this and its resultant effect, take form within the Nigerian economy. You take a cost section of non-performing loans, or you do a quick review of, percentage of credit to default ratio within the sector, you start to see that over the years with the operation of, as we continue to increase our operation, the non-performing loans within the banking sector started to decline. We started to see the decrease. For some banks who would say, they would rather go bullish on the reactive mechanisms where they want to not use the bureau, but use forceful mechanisms of putting people in obituary, sending random messages to people. They would get results, but those results are reactive, and in the long run, those results itself would be the reason why their book balances will fall out of ratios and their non-performing ratios will skyrocket. The ones that are proactive, that actually subscribe to the bureau, would proactively engage customers who would actually have a tendency to perform. Because that's the essence of what we do. Those that default are already on the red flag and they have a bad credit score, so the analytics will system them out, and they're able to now cautiously engage customers that are likely to or have a propensity to actually repay them. And in the practical sense, it's been a powerful utility within the financial sector, and we're hoping to see it from the perspective in the next future. We're doing a lot more than that. We're doing a lot more than achieving it. So much we've had African countries all over the world come around to understudy us. And Malawi, Kenya, the rest of them have been around. And I'm talking about the Apex Bank from those countries. We're doing wonderfully well, but then there's also a massive amount of room for us to develop and extend our initiative even bigger ways. Again, if you look at the statistics of financial inclusion within the Nigerian system, let's say for instance you take 200 million Nigerians and you cross-section that out to say 100 million adult population. If you have 100 million adult population in the system, the question then is, just how many people do you have in that adult population that are actually financially inclusive? Uh, and if you look at that ratio within your 100 million, and I'm just using these numbers, if not cherry picking them anyways, but if you take out the number of people that are actually financially included within your 100 million, and you start to look at the figures, it will then beg the question: do we still have a long way to go, or we've actually been able to cover a large amount of? But that may be over and beyond the purpose of this interview, so I won't dwell on that anymore. We render numerous services, but the core of what we do again is identifying defaulters and seeing those that are also good to they have a propensity to pay. So at the core of what we do is the credit score, and we have a scoring system called the NICO Credit Score, specially designed for Nigerian with extensive advantages. The credit score is simply a 3-digit statistical probability that simply tells you at a snapshot the tendency of any individual to actually do something right or wrong, at least within the credit system. And so it would just give you a number of, say, 350 or 8, 720. And in some cases, or in most cases, say people rarely get to that type of score, but you say, oh, 720 is good, and say 350, 400 is bad, for lack of better words. But we identify that the customers with higher numbers are good customers or better performing customers, and the ones with the lower numbers are the ones that are more likely to default or are higher risk customers. And there are many analysis, a lot of analysis are actually go into how we actually arrive at that number, from the amount of credit facility the person is taking to the default history and a dilution of credit facilities. Some people are just plain vanilla customers, where in some cases they borrow personal loans, and then you have other people who will take mortgage or take a little bit of personal loans, will take a little bit of everything. And when those people become more diluted, you see how they perform across the sector. You can then start to say, or across even other variances, you can then start to say, okay, not only have they been performing in one regard, but they've actually been, they've been steadfast in one regard. So pretty much, it would weigh all of that. The system will do that in a quick and swift fashion. Simply provide that 3-digit scoring for, and that's just one of the systems. You can have the analytics, you can have a detailed credit scoring, you can have the guarantee report. In some cases, we've seen where people sign off for people as witness or as guarantors, and they don't know that in the TNCs of such signature, they are actually liable if the other person were to default. And so the system should say if the loan or the credit in the depending on the nature of the loan. And at the point where the defaulter defaults, they don't even know that they are now carrying that liability until they walk into the bank someday and they try to get a loan, and someone says, "Oh, you're owing us," and says, "I never collected the money from you." And so those are numerous cases. There are different types of scenarios that can actually happen in this sector. The financial sector has, let's say, it's growing pretty much. Yeah, I think it's an emotional one for me, so I try not to delve into it too much. But I think there's massive room for development. We may be doing the country a lot of the service if we don't extend our group a little bit further. And I've been saying this not just to regulators, but even to stewards and people in the financial sector.
This is First Central Credit Bureau Limited. Welcome to our world. First Central Credit Bureau. Call us now.